Now there are so many companies which get into expansion mode. They take huge debt or equity. They go for major expansion, and the capex does not justify the sales. And then these companies become dead duck. Let's see some examples, and let's try to connect this with the Indian stock markets. A lot of companies there. All finance students, we inevitably have to have interest in the stock markets. And let's see how fundamentally a lot of companies where the capex expansion has been done, but the sales have not been justified, which has resulted in pressure in the balance sheet. Let's take some examples. So let's go to this company called Bhushan Steels. The Indian audience would know that it has been one of the largest steel manufacturing company in India, right? So what I did was I downloaded their balance sheet and their profit and loss account from the Money Control website, moneycontrol.com, right? So I have this, screenshot of this data from Money Control, right? Now I have this data for 2012, 13, 14, 15, and 16. Right, so this is the data. So just so this goes from right to left, so just try to read the numbers that ways. And that's the first check I do once I start analyzing any company. My first check. See the balance sheet here. So your equity capital this is in crores. This was 128 crores. This was 145 crores, right? So you also have your preference capital, which is almost insignificant. You also have your reserves, right? So your reserves are almost 7,000 crores. So this is almost 9,000 crores, and this is around 9,000 crores, and so on. But your reserves are gradually declining. That's my first sign of worry. If I'm a shareholder of the company, that my reserves are declining, right? That means I'm using my reserves maybe for expansion purposes. That's the first thing which I observe from this balance sheet. And because that's my money, I could have used it the way I would have wanted to. But that is still not significant. What is more significant is I'm a steel company. It does require huge capex, right? So I have secured loan of almost 17,000 crores, right, which I've taken from the banks, giving some security. And I have an unsecured loan of almost 2,900 crores. And if I see my loans, the debt part, my secured loans grow from 25, so 20, almost 27,000 crores, almost 32,000 crores, almost 38,000 crores, and almost 42,000 crores of debt. And why do I take debt? For my expansion purposes, right? My reserves have gone down. So 9,000, 9,000, 7,000, 4,000, my reserves are consistently declining. This is declining. My debt is increasing. And let's take it that it is for the purpose of expansion. So let's see the profit and loss account. So again, downloaded this data from Money Control, right? So let's see their balance sheet. So your sales was almost 10,000 crores. Your sales were 11,000 crores, 10,000, 11,000, 13,000 crores of your sales. So your sales have grown from almost 10,000 to 13,000. right? Yeah, similarly, your raw material has also increased simultaneously, but your debt has increased from almost 20,000 to more than 42,000. 42,000 crores of debt on a sales growth of just 3,000, from 10,000 to 13,000, and that's it. See that, see the pressure on the balance sheet, and see the pressure on the stock price. Let's try to see the stock price movements. I downloaded this data from Yahoo Finance, right? So if I see my adjusted close price of this company, Bhushan Steels, around this time period, in 17th September 2012, my price was 455. And if I go down on 15th of September 2017, almost 68 rupees. Sorry, this one. This is my adjusted price. This one is my adjusted price, the one which I'm highlighting in red, right? So see the fall because of the pressure on my balance sheet. And if you see this today, it's an insolvent company, and it has been one of the largest steel manufacturers in India. The capex has to justify the sales and subsequent profitability, right? Let's take another example. So let's take the example of this company called Reliance Communications. Reliance Communications. So what I did was I downloaded again their balance sheet from Money Control. So let's see the balance sheet now, right? Now telecom is a tricky business. It requires huge capex. Let me also download their profit and loss account, and let's read that together. Right, so here we go. So let's try to read the numbers. We also have the numbers for 2019, but till the time I'm recording this, I still did not have the numbers. So my share capital is 1021. So think from the perspective, if I'm the shareholder of the company, right? How do I read the balance sheet, right? Again, this is going from right to left, so just see the numbers accordingly, right? So 14, 15, 16, 17, and 18, right? Now, if you see the share capital of this company, so 1,000 crores, 1,200, and so on, so not much change. You see the reserves. If I'm a shareholder in 2014, I'm still okay that they have sufficient amount of reserves with them, right? Almost 30,000 crores of reserves they have, right? Right. And if this is 2014, also see the quantum of debt they have. So around 22,000 crores of long-term borrowings and almost 7,000 crores of short-term borrowings. This turns out to be something around 30,000 crores of debt. Almost 30,000 crores of debt. And if I talk of 2015, so this is 25,000 crores plus 1,100 crores. So almost again 27,000 crores of debt. 24 plus almost 3,600. So again 28,000 crores of debt. And now over here, this is 18,000, and short-term borrowings are almost 8,000. So again 26,000 crores of debt, 18 plus 8. And this is 9,000, and this is 18,000. So almost 27,000 crores of debt, which is almost consistent. It's not decreasing. So it was 30,000, it was 27, 27, 27, and almost 27,000 crores of debt, right? and it's a tricky business. It's a business which requires huge capex, the licenses fees, the tower fees, the intense competition, India, a consumer market, all those tricky things for this business, right? And let's now look into their profit and loss account. So they were earning revenues of 11,925 crores, right? The first thing which stings me is, I have a debt of almost 30,000 crores, right? Huge capex, and what I'm earning is 11,000 crores. Okay, because I have subscribers every month, and I'll be getting revenues from them, so I'll be able to work it around. This month, 11,000 crores. Now see what happens here. Straight from 11,000 crores, this falls to 3,500 crores. And if you recall, Reliance Jio came. Jio came on 30th of September 2016 when they made it free for all. A new competitor came, which absolutely decimated the entire telecom space. It captured the imagination of the entire Indian household, selling their services free of cost for a period of 6 months. And now see the fall here. I've not been able to come out of that cocoon. It's 11,000, 3,500, 2,200, 2,200 of my revenues, right? My debt is almost consistent, almost 27,000, 28,000 crores of debt. And if I talk of my revenues are constantly falling, and a new competitor has come which has eroded my market share. How do I survive? If you see the stock price performance, right? So let's see their numbers. See the pressure on the balance sheet, see the pressure on the obligation of paying debt, because if I've taken debt, I'm supposed to pay the debt as well. So this was almost 77 rupees. This adjusted close price was almost 77 rupees. And I've downloaded this data from Yahoo Finance. So if I go down, it's almost laughable, 0.85 paisa. Not even a rupee, not even 1 rupee. You see the erosion of wealth. My capex has to justify my sales and my subsequent profitability. Let's take another example. This company called Reliance Industries, right? Now, Reliance has been, the darling of the stock markets ever since the stock markets in India have been in existence, right? It has been the most actively traded stock, the most voluminous stock giving returns to its shareholders year on year basis, right? But let's try to see the stock price. Let's see the stock price movements. And I've intentionally taken it from 2012 onwards. If you go back a little bit in the history of Reliance and Reliance Communications, both the brothers, Anil and Mukesh, they split in 2005. So Reliance Communications went to Anil, and Reliance and Mukesh Ambani did not have Reliance Communications at that time. And both the brothers had a non-compete clause that they are not going to venture into each other's business. So that non-compete clause was for a period of 5 years, right? So that got over in 2010. So in 2012, Reliance forayed into, they announced their plans to foray into the telecom space in 2012, and they committed an investment of 2.5 lakh crore. 2.5 lakh crores into a new business, which is tricky, which is tough, and it is constantly changing because of change of technology, right? So I'm venturing into a new business which requires huge capex. How has this money supposed to come? Of course, through debt and through equity, right? But at that time, let's try to analyze. My stock price was around 308 rupees of Reliance Industries, right? And it has been one of the most actively traded stocks, right, ever since, right? So if if you recall the timelines of Reliance Jio, a new business which has come, which is right now only taking investments from me, which is burning cash right now for myself, into a business which is unexplored sort of for me, and which is risky, right? So I have to shell out almost 2.5 lakh crores of rupees. So this happened till if you remember the timelines, around September 2016, Reliance uh, you know started Jio. That is around this time of September 2016 when they started Jio, right? They officially launched it, and they made it free for all for a period of 6 months. And that is the reason there was a fall in the pricing of Reliance Communications in terms of the revenues, if you remember. So from 11,000 this became 3,500 or something, right? Now in for a period of 6 months they made it free for all, and from 1st of April from 1st April 2017 they started monetizing their assets, their subscribers. They started charging their subscribers for the services they were rendering, right? Now let's try to read their stock price movements. So this is around 2012. So if you go down, I'm just going down, so I'm focusing on this adjusted column. Let me just highlight this so this is clear, right? So let me just go down. So I go down, this is the dates. So around 316, 321, 322, 330, 321, going down, 2012, going down, 2013, 370, 380, 347, 367, 385, almost 400, 370s, 400s, going down, 406, 404, 376, 369, and these are very subdued levels considering that it is Reliance Industries. So 500 odd, 500, 480, 470, 470s, almost a subdued stock, not much of interest. So this is 2015, 398, 400s, 400s, 400, 450s, 445. Can you see that? Almost subdued. So let's talk of 2016 now. This is 2016. So 480s, 500s, 450s back to 400s, 480, 500, right? So this is around that time. Sorry, no, this is August. So yes. So this is around the time. This is around the time when they launched Jio and they made it free for all. I'm venturing into a new business. So in 5 years, my stock price movement has been from 360s to 400s to 500s, and that is it. And this is an abysmal standard as far as Reliance is concerned. So you go down. So in 2017, so on 2017, So this is around the time when they started monetizing the capex, when they started charging their subscribers from around this time period, right? Now my capex, I've committed an investment of almost 2.5 lakh crore rupees, huge amount, the single largest ever investment made in telecom space anywhere in the world. Huge investments into a risky business. And now see this, you go down 697, 646, 650s, 692s, 700, 800, 900. This is still 2017. 900, 900, 950s, 1000, 1100, 1200, 1100, 1100, 1200, 1200, 1300, 1300, 1400, 1200, 1150, 1200, 1100, 1350, 1400, 1500, and on 31st of December it was almost 1500. So if you talk of this, from 500 or 600 odd, a price became more than double, almost thrice. My capex has to justify the sales, and it has to justify the profitability subsequently. The cash has to come into the business. If you've taken debt, right? So debt is done for expansion purposes. The assets have to be effectively utilized. These have to be converted into sales. Then there is a justification, and that the stock market's reward if you look into the stock markets fundamentally. So whenever you wanting to invest in the stock markets, try to identify stocks whose debt has gone down, whose reserves have increased, whose sales have increased, the profitability has increased. Those are examples of good fund flow. Let's take some examples. Let's take some example for this. Let's take the example of good fund flow. Remember golden rules of analyzing a balance sheet. Let's take this example of this company called Vinati Organics. It's a publicly listed company. It's into chemicals, right? Now what I have is their dated annual report, long dated annual report, and there's a reason behind why I'm taking a dated annual report, right? Now what we get from the companies is their income statement, their cash flows, and their balance sheet. This is what we get from the companies, right? So I downloaded that annual report from the company's website, right? So this is the complete annual report. So I am on this page number 76 of this company, this page number 76, right? Now what I have is just the numbers, just these numbers here, right? Now so their equity and liabilities, your share capital, your non-current liabilities, your current liabilities, your assets side, and so on, right? So this is their balance sheet, right? Now taken it, suppose you were in 2016, you got this balance sheet and you're trying to make a sense of the numbers, right? Remember, how do we read a balance sheet? We got to understand and comprehend the story which we can make from the numbers. How can we comprehend and read the numbers? Let's try to understand that. Remember 4 rules of reading a balance sheet. 4 rules of reading a balance sheet. And once you remember those rules, you'll be able to comprehend and try to connect the dots of a story. Okay, so we're going to understand from a balance sheet the fund inflows and the fund outflows which happened. Let's understand. Suppose if my liability side, if my liability goes up from last year to this year, if my liability goes up, then this means it's a fund inflow. It's a fund inflow for me. If my liability, and we'll understand this, what this means. If my liability goes down, this means from a firm's perspective, it's a fund outflow. If my asset side, goes up, this means it's a fund outflow. And if my asset side goes down, this means it's a fund inflow. Just remember these golden rules and you will be able to comprehend the balance sheet. You'll be able to read the numbers. Let's try to do this exercise with this company called Vinati Organics, right? So what I will have is, for this company, I will let me just try to put the numbers, right? Let me just try to put the numbers here. Now friends, with these fundamental rules in mind, that liabilities go up, it's a fund inflow, liabilities go down, it's a fund outflow, like assets go up, it's a fund outflow, and assets go down, it's a fund inflow. Let's try to read the balance sheet of Vinati Organics, right? We'll apply the same rule. Now what we are getting from the company is their annual report and just the numbers, right? What we're supposed to do is try to understand if there is something between the lines between these numbers and if those numbers makes any sense. Okay, and we'll have the same rules in mind. So what I'll do is I would have the fund inflows, I would have the fund inflows, right? And I would also have the fund outflows. The fund inflows and the fund outflows, right? So let's try to read each and every item, try to make a sense of whether it's a fund inflow or a fund outflow, right? And remember these 4 rules at the back of your mind. Okay, so let's start with the first one. It says my share capital. My share capital, it is 1031 and this is 1031. There is no change. Let's ignore this, right? These numbers are in lakhs, so just remember this, right? Okay, so now my reserves and surplus. Now what is the reserves and surplus? My reserves and surplus is nothing but my profits which I have earned from the operations this year, which I have accumulated, right? So this is the reserves which is accumulated over this year. So this was 423 crores in 2015 and this is now 530 crores. These numbers are in lakhs, so this is in crores. So 530 crores in 2016. So in a way, so 423 crores has increased to 530 crores in 2016. So this is a fund inflow for me, right? So with respect to my reserves, this is a fund inflow for me. Of how much? Just for academic purposes, I'm just taking the numbers. So 530 minus 423 crores. So a reserve of 107 crores is generated. And because this is my liability side has increased from 423 to 530. So this is a fund inflow. Okay, remember this rule. Now come to my long-term borrowings. My long-term borrowings. So this was 37 crores. This has become almost 13 crores, right? So from 37 crores, it has become 13 crores. So my liability side has decreased. So this has gone down. So this is my fund outflow, right? So my loans and my debt, how much is my fund outflow? I'll say this is nothing but 37 minus 13, because it's an outflow. I'm just making it minus 24. Okay, so these were my long-term borrowings. Let me just rephrase this. I wrote it wrong. So my long-term borrowings. Now come to my deferred tax liabilities. My deferred tax liabilities, it changed from 38 crores. This 38 crores, this now became 49 crores, right? So, if I were to go by my rules, my liability side has increased, so it's a fund inflow. But let's understand what is a deferred tax liability quickly and shortly for the benefit of those who do not know this. There are two ways I make my books of accounts, as per income tax and as per the Companies Act, right? So the depreciation rates in the income tax and Companies Act are sometimes different, basis which I charge additional depreciation in a Companies Act or in the Income Tax Act, because of which my profits either increase or decrease. So I create either a deferred tax asset or a deferred tax liability. Okay, now in this case I've created a deferred tax liabilities. So my liability side has increased, so there is a fund inflow of this much. The increment is my fund inflow because my liability side has increased. So let me set my deferred tax liability. So there is a positive fund inflow of 49 minus 38. So I have a positive fund inflow of 11 crores. So these numbers are in crores, just remember. Okay, now come to my short-term borrowings. So this is 1 crore, so this became 2 crores, right? So an insignificant number, just for academic purposes, let's ignore this for now. Now my trade payables, so this was 21 crores, so this became 22 crores. Again, small number, just ignoring it, right? So other current liabilities, so this was 40 crores, 40 crores, and this became 47 crores. So my other current liabilities in terms of my current assets, so 40 crores became 47 crores. My liability side has increased. So my liability side has increased. So there's a fund inflow in this case. So my other current liabilities, so this increased from 40 crores to 47 crores. So there is a fund inflow of 7 crores. Now come to your short-term provisions. So 25 crores, this changed to 11 crores, right? So my short-term provisions. So my short-term provisions, so this was 25 crores, now this has become 11 crores. So it's my liability has gone down. So that means it's a fund, my liabilities has gone down, so it's a fund outflow. Remember these roles. So my short-term provision, so shall I say this is equal to 25 minus 11. So 14 crores of fund outflows, right? Now come to the asset side. Asset side, I have my fixed assets, so my tangible assets. So my tangible assets, they change from 320 crores, they became 376 crores almost, right? So my tangible assets, now it's the asset side item. So my 320 crores became 376 crores. That means I shelled out cash, I shelled out additional funds to increase my asset base of tangible assets. So it's a fund outflow for me. So this is equal to, shall I say, 376 minus 320 crores, minus 320 crores, right? So there's a fund outflow of 56 crores. Now let's talk of intangible assets. My intangible assets, they change from 6 crores to 5 crores, small amount, just ignoring it. So my capital work in progress, this means I'm building some assets which are right now work in progress. These will become complete tangible assets in some time. So this change from 20 crores to 20, almost 25 crores, right? So my asset side has increased in this case, right? So this has increased. So it's a, because my asset side has increased, it's a fund outflow for me. So I said my capital work in progress, my capital work in progress. So this is, this has changed from 20 crores to 24 crores, right? So almost 4 crores, or rather 5 crores, rather 5 crores, right? So it was almost 25. Okay. Now my other long-term loans and advances, this was 10 crores, and this is, this was 10 crores here. This is 10 crores, and this has increased to 15 crores, right? Now if this has increased to 15 crores, so, and this loans and advances means, it's because it's a part of my assets, so this means that I have given loan, I have given my loan to another person, and that's why it is an asset now. So this changed from 10 crores to 15 crores. So loans given, so if I've given loan, it's a fund outflow for me because my asset side is increasing, right? So this is equal to 5 crores of fund outflows for me. My non-current, other non-current assets, so this changed from 75 crores to 190, sorry, 0.75 crores to 1.98 crores. Small number, just ignore this. Come to current assets. In my current assets, your current investments, 273 crores to 273 crores. No change, just ignore this. No fund inflows, no fund outflows. Your inventory, this inventory, this changed from 50, inventory is your stock. So your inventory, your trade receivables, these are a part of your working capital. So your working capital, even your cash, right? So your inventory, so this changed from 54 crores to 44 crores, right? So my asset size has gone down. That means I had an inventory of 54 crores. Now I have an inventory of 44 crores. So I was able to sell my inventory and got cash, and my asset side has decreased. So it is a fund inflow for me. So I had additional funds of the difference, right? So my inventory, my inventory, you know, this changed from 54 crores to 44 crores. So there was a fund inflow of 10 rupees in this, right? Similarly, you talk of your trade receivables. This changed from 129 crores. From 129 crores, this became 114 crores, right? So trade receivable means my debtors from whom I was supposed to realize the funds. I'd given my goods to them, but I had not received the money. So this was 129 crores. Now this has become 114 crores. So this means there is a fund inflow of the difference of these amounts, right? My asset side has decreased. Remember the rules. My asset side has decreased. So this is a fund inflow for me, right? So trade receivables, my trade receivables. So this changed from 129 crores to 114 crores. So there was a fund inflow of 15 rupees. My cash and bank balance. My cash and bank balance. So I had a cash and bank balance of 27 crores. Of 27 crores. Now this has changed to 72 crores. So this means what? So I had money, I had cash, which I have from my firm, I have given to the bank. So there is a fund outflow which is happening because I have from my firm, I have given the money to the bank, right? Because my asset side is increasing, right? It's a fund outflow. So cash given to the bank. So this is from 27 crores. So from 27 crores, this is, it has become 72 crores. So I said minus of this 72 minus 27, right? So 45 crores of funds outflowed to the bank from the firm. Now my short-term loans and advances. So 25 crores to 27 crores. So let's take it. So my short-term loans and advances. This is because this is an asset side. That means this is the amount which I have given. I have given to somebody. So this was 24 crores. So this has become 26 crores almost. So because I have given the loan, my asset side has increased. So it's a fund outflow for me. So this is equal to 26 minus 25 almost. So 1 crores of loans and advances, right? So my other current assets 2.5 crores to 1 crores, insignificant number, just ignoring it, just ignoring it. We just wanting to see my there has been a fund inflow from my liability side, or there has been a fund inflow in my asset side, or fund outflow or fund inflow in my asset or the liability side. Only four things which I have observed in this, right? So if I were to sum this up, if I were to total this up, if I want to see the total movements, I just sum up the entire balance sheet here. So if I were to sum this, I'm sorry, so I got this, so it's almost 150 crores. So if I were to sum this up, so this is, yeah, This is 148 crores. So, the difference might be because of, some of the numbers which we just ignored. So it's almost similar, almost similar. Now, having said that, this is my broad level fund inflows and my fund outflows, right? Now, this is what we get from the companies. Now, our reading of these numbers, what do these numbers indicate based on these four fundamental rules of funds that we have just learned? Now, if I talk of my reserves, this is the profit which I have earned from the operations this year. There was an increment of 107 rupees of reserves, and by 107 rupees I mean the crores, right? So just for learning purposes, let's take it in absolute terms. So I had 107 rupees of reserves with me, right, which I earned, and basis that I was able to repay 24 rupees of long-term borrowings. I, defer tax liabilities, something to do with the taxation part, so just ignore it. My short-term provisions of 14 rupees of fund outflows. That means I was able to uh, you know repay some portion of my provisions. That's why I have reduced my provisions by 14 rupees, right? And more importantly, now my tangible assets base has increased, which has resulted in a fund outflow of 56 rupees and in my working capital of 5 rupees, right? So total of 61 rupees I have invested in my fixed assets. I've done a capex. I've done a capex of almost 61 rupees for my fixed assets. And why do I do a capex? For the purpose of growth and expansion, which I have funded from my reserves, which I've earned this year. I also had surplus cash, so I've given away the loans. I've given away this loan. I have also surplus cash, so I gave away the money in the bank. I parked my money in the bank, which was kept with me, right? I gave more loans, right? And also I was able to sell off my inventory, so I got a positive funds of 10 rupees with me. I was able to get money from my debtors, so there was a positive fund inflow of almost 15 rupees for me, right? So because of this, because of better working capital management, I earned fund inflows of almost 25 rupees for me. Now this means what? I'm earning operationally. I've earned well. I paid off my loans obligations. I reduced my provisions. I'm investing from this money. From this money, I'm investing in the future assets, which are going to give me returns for onwards years. And if you remember, friends, I'm talking of 2015 to 16. So this is for the year ending 31st March 16. And that is the reason I took it for this, for a dated year, so that we could understand what is happening with the company. I had the money. I used the money to repay the loans. I used the money for purchasing fixed assets, doing capex, which will help me or put me in a good state onwards. I'm managing my working capital well because I'm able to sell off my inventories. I'm able to realize my money from the debtors. And I had surplus money, which I'm parking in the bank, right? This is an example of a good fund flow which the company is managing, the way the company is managing its funds. It's making investments in capex for the future. It is using that cash which it has earned. It is repaying the debt. This is an example of a good fund flow. And because this was 2015, let's see how has the company been working towards its financials onwards years for 16, 17, 18, 19, 20 and onwards. Sorry, not 20, till 2019. So what I have was I have the numbers from let's see the numbers of this company. What I did was I downloaded their numbers from let me just open this. I downloaded the numbers from Screener. Right, it's a free website wherein you get the numbers from the company. This is Screener, right? So if I go to the balance sheet here, let's read the balance sheet. So this is the equity capital, their reserves, their borrowings, and other liabilities. That's how they have defined the balance sheet, right? Your net block, which is your tangible assets, your work in progress, your investments, and others, right? Now let's just read this at a broad level. You see your reserves. Your reserves are growing. This was this much, which we had just calculated for March 16. So this increased to 669 to 786 to 1041, right? Your reserves are increasing. Your borrowings, right from here to this one, your borrowings are going down. Okay, this was an increase, but it's very slight increase, but your borrowings are going down, right? Your other liabilities are increasing, that's fine. Your net block, which is your tangible assets, that is increasing. It has been increasing, increasing and increasing. Your capital work in progress, 10, 20, and so, and a huge jump here. You are building assets for the future. You are reducing your borrowings. You're piling up your reserves, adding it up. Your investments are increasing. The money you don't need, you are giving it to somebody else so that your money does not remain idle. Example, an absolute example of good fund flows, right? And I showed you the balance sheet of 2015 and 16. And now let's see the stock price movements, this company. So let's go to the stock prices. So this was 412 rupees around the time of 2014 and 15, around the time we were analyzing it, right? You go down, so this is the adjusted close price, right? So if you go down, so 400 and something, it's gone down, 500, 600, 700, 800, 900, 1000, 700, 900, 1000, 1300, 1100, 1500, 1600. You go down, it's been around 1900 rupees, right? That is a fundamental analysis that you can make out looking into the numbers. Remember the 4 rules which I just taught you, right? Liability side goes up, it's a fund inflow. Liability side goes down, it's a fund outflow. Asset side goes up, it's a fund outflow. Asset side goes down, it's a fund inflow. This is just what we did here. This is just what we did and a plain reading of fund inflows and outflows, we can try to make a sense of the numbers. What was happening here was company was using its reserves in 2015 or 16 to build the tangible assets for the future, selling off, reducing their debt, bettering their working capital management, and the results are there for you to see how the company has evolved. The stock price has bamboozled over the last so many years. That is how you try to make a sense of the numbers. So this is what we got to identify: good fund flows, remembering these four rules, how the debt has to gradually reduce, how the working capital management has to effectively better itself, and you will see the stock prices zooming like we saw over here. Right now, the essence of teaching you this was that the capex has to justify your sales and subsequently your profitability. Right now, let's go back to Heineken model. We had stopped at the tangible assets, and let's try to apply the same logics into solving this. So let's see that in the next video.